You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 9th day of July, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. Our first live broadcast is reserved for members only and those who are taking the 1-week free trial. That is our live training room. 2 hours a day in an interactive environment with a living, breathing teacher, taking off trades live in real time, explaining every move he makes, every trade he takes, the reason behind it, or I should say the rule behind it, and answering your questions at the same time while you trade along in your demo account so that you can qualify to go live. Now, when you take the trial, you're not just getting the live training room. You're getting everything that our members have, every single resource, for 5 consecutive trading days. Now, it says free trial, but that's not really true. You see, it costs us. It just doesn't cost you. Now, doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial. You will get 5 consecutive trading days, even if it stretches over a weekend. Let's say you signed up today. At mytradingiq.com, top of the page, there's a link that says 5-day free trial, no credit card required. If you click that link today and fill out the registration form properly and hit submit, what'll happen is we'll get your desktop set up, get your indicators indicating, and then your trial will actually start tomorrow. And you're thinking, that's a Wednesday. I'm only going to get 3 days. Not true. You'll get 3 days, plus you'll get the weekend, plus you'll get 2 days next week. 5 consecutive trading days. Just make sure you fill out that registration form properly, because it's an automated process. And if any of the information's missing, then we don't get it, and you don't get the free trial, and then you think we were pulling your leg or something. I don't know. So it's really worth the minute or two to check and double check and just make sure you fill everything out right. And if you have any questions while you're filling out the form, you can call us at 949-42-EMINI or email us support@cfrn.net. Okay? All right. Now, when the live training room ends every day at 11:30 a.m. Eastern, we take a 30-minute break and come back for the afternoon broadcast, this broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's a couple different ways that you can join this afternoon broadcast live. Let me give you the best way first. You only got to do it once. Go to mytradingiq.com. But this time, scroll down the page to where it says afternoon broadcast. Click that link. There you're going to have a very simple 30-second registration form. And you're done. Not only will it get you in that day, but every trading day going forward, what will happen is you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, the benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, you can't join live, but you'll want to get caught up later. You can do both of those via our YouTube channel. It's very easy to remember, youtube.com/CFRN. You already have the YouTube part memorized, so just remember CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, we're simulcasting. That means we're broadcasting in two different places at the same time. Simulcast, just a fancy word. Not only do we broadcast live every trading day on our YouTube channel and on our platform, but we archive each and every daily broadcast. Currently, there's over 2,600 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more. Now, you're not going to watch them all, of course, but just pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit, jump to another day, another month, another year. Do the same thing. You'll see how we've evolved over the years. 8 years. The YouTube channel goes back 8 years, I believe. Hold on for me 1 second. Sorry, I had my phone on the charger and it dinged, and it was just somebody that wanted to save me money on my auto insurance. Hey, everybody's got to make a living, right? Okay. Moving on. So, you know how to join the afternoon broadcast, whether you're in your office or out of your office. You know that you can go back through the archives and see how we've evolved. Just remember youtube.com/CFRN. Our schedule, as always, we open with our daily devotional, word of prayer. I share a few news articles with you. Then we get into a recap of the alerts, the Logic 247, the Concierge Trade Alerts. Then about 12:45, 12:50, Michael joins us and gives us a recap of what happened in the live training room this morning. And then at the top of the hour, we go live on the TradingView platform, do some live trading for 30 minutes. When he's done with that, I come back and I finish the recap of the alerts if I haven't finished it already. And then I wrap things up with our good word for the day. So let's get to our devotional. Now, our current devotional topic is The Chosen, Season 4. We're in day 4 of 7. Today's scripture is Matthew 5:38 through 42. And I'm going to share with you from the Message translation. Here's another old saying that deserves a second look. Eye for eye, tooth for tooth. Is that going to get us anywhere? Here's what I propose. Don't hit back at all. If someone strikes you, stand there and take it. If someone drags you into court and sues the shirt off your back, gift wrap your best coat and make a present of it. And if someone takes unfair advantage of you, use the occasion to practice the servant life. No more tit-for-tat stuff. Live generously. Those are the words of Jesus. And I'm going to grab my phone so it'll stop dinging on me. All right. The topic of what we're going to discuss today is unconventional power. When you read the Gospels, Jesus seems like a nice enough guy. He's kind, he's a good teacher, he heals and helps folks. But when you zoom in on specific moments, he can seem extreme or even insane. While preaching the Sermon on the Mount to people living under Roman oppression, Jesus says in Matthew 5:41, if anyone forces you to go 1 mile, go with him 2. The whole audience probably gasped with disgust towards this idea. By rule of law, Roman soldiers could legally force Jewish people to lug their equipment for up to 1 mile. The cruel rule dehumanized people, treating them like pack animals. And now Jesus wants to care for these oppressive overlords by offering to give them 2 miles? Is he crazy? Isn't that just being passive and weak? Doesn't that allow evil to win? From the perspective of our world, yeah. This way of Jesus seems weak and even foolish. But one of the scenes from The Chosen pokes at something we can all sense. That desire to get even inevitably leads to increasing harm and hostility. What's the old saying? Don't get mad, get even. Yeah. But the power of forgiveness and love is stronger, resulting in something we all want. As the disciples overcome their shock about Jesus' claims and perhaps their suspicions about his sanity, they choose to trust him. And the most unexpected thing happens. When they choose to shoulder the equipment 1 mile more, the soldiers are baffled. Why are these people we treat so poorly choosing to treat us so well? Their prejudice and pride are exposed, and not because of retaliation or even accusation. One simple act of love slowly reveals that the people these soldiers have despised are not animals to use and abuse. They're human beings. It's as if God's healing love wakes them up to basic reality, and their blindness is overcome by His light. Jesus' instruction to go the extra mile illustrates a key conviction woven throughout His Sermon on the Mount. Good change only happens with God's kind of power. The power of loving kindness and goodwill expressed toward all neighbors, including our enemies. I'll never forget the first time I prayed for an enemy. Someone in business had done me an incredibly, horribly wrong thing. This was many years ago, back in 1989. No, 1999, and maybe 2000, 2001. Yeah, I'm just saying, it was a very long time ago. Remember, it was at 37 years old that I came back to Christ. That was in 1996. So, if you're good with math, you figure out how old I am. But I was steaming, I was plotting. I had some evil plans cooked up for this dude, and I was going to expose him to everybody. The voice of the Holy Spirit crept in because, remember, I had now turned my life back to Christ, who all those years I was in the wilderness was just standing there waiting for me. And the Holy Spirit spoke to me and says, what if you don't do that? What if you just forgive him? What if you pray for him that he see the error of his ways and change his ways? I go, well, I certainly feel miserable now, so maybe this will make me feel better. It's not going to change him or change what he did wrong, but at least maybe I'll feel better. Now, it does say in the Bible that when you pray for your enemy, fire coals will rain down on their head, but I'm not going in that direction, and that's not what I was trying to do or hoping to do. I just wanted to personally feel better because I had been wronged by someone I trusted very much. You know what? It worked. I felt better. In fact, I felt like dancing on air. Now you're probably wondering, did the fire coals come down? I'm almost ashamed to say it, but they did. Things happened to this man far worse than the schemes I had cooked up to get revenge. In fact, I started praying, God, please lift this oppression off of him. I mean, it's like everything he touched just turned to dust. And I said, Lord, I prayed for him, but I never wanted this to happen. Then we lost touch for years. And then today we're good friends again. We don't talk much, but anyway, pray with me, okay? Heavenly Father, we come before you seeking strength and grace to live out your teachings. Help us, Lord, to turn the other cheek when we are wronged and to go the extra mile in love and service to others. May we reflect your mercy and compassion even when it's difficult, showing the world your boundless love through our actions. It's in Jesus' name we believe and pray. And everybody said, Amen. Well, amen and happy Tuesday. Allow me to now give you the numbers from around the world. We'll start here in the U.S. with cash markets, or the indices as they're called. Currently the Dow's down 24 points. Nasdaq's up 57. S&P 500 is up 13. The Russell 2000 is down 7. So even though the S&P put in a new all-time historic high today, if we look at the four major indices, once again, they're divided. Got 2 in the red, 2 in the green. Now that new all-time historic high wasn't by a lot, and we quickly pulled back from it. We'll see where we're at when we go to the charts in a few minutes. But needless to say that even though the markets are divided, there's no movers or shakers in that bunch. And the reason, as futures traders, we like to see all four of the major indices the same color is because you get better follow-through on your trades. When the indices are divided, there's like this tug of war going on. Things just flow so much smoother when all four are the same color. And because we're futures traders, we can be long, short, long again, all in the same hour, if that's what the chart tells us to do. So, I know I say that a lot, but it's important. Crude oil down $1, trading 81.32 last. That's a drop of 1.25%. Gold up $5, trading 23.6840 last. Silver up 14 cents, trading 31.06 last. In the Asian markets at the close, the Nikkei posted a gain of 800 points, 799 and change. But that's almost 2%. The Shanghai gained 36, and for the Shanghai, that's a gain of 1.25%. The Hang Seng was down less than a point, so basically unchanged on the session. In the European markets at the close, FTSE down 53, the DAX down 235, which is over 1.25%. The CAC down 118, which is over 1.5%. So we had a green, well, I guess you got to call it a mixed day in Asia, but mostly green. Remember, the Hang Seng was just flat. But it was definitely a red day for the UK. And as I've already mentioned, it is a mixed Radio Tuesday here in the US of A. So let's hop over to the news. As you know, Federal Reserve Chair Jay Powell is testifying today. I'm not sure where, maybe it'll be in this article. Oh yeah, he appeared today before the Senate Banking Committee, and tomorrow he'll testify before the House Financial Services Committee. But anyway, Federal Reserve, Jay Powell, chairman, indicated the central bank is inching closer to feeling comfortable about interest rate cuts, saying that he was encouraged by evidence of cooler inflation and that more good data would help the Fed get to where it wants to be. Now, it's kind of sick that because we have more unemployed people, that's good news to the Fed. Let me continue. The inflation numbers have shown some modest further progress after some hotter readings in the first quarter, and more good data would strengthen our confidence that inflation is moving sustainably toward 2%, he said in testimony before U.S. lawmakers today. Okie doke, Jay. Whatever you say. Now, crude oil. OPEC and OPEC Plus group have had reasons to be happy last week as Brent oil prices topped $87 per barrel. But the most recent rise in oil is no thanks to the OPEC Plus members that have continuously failed to comply with their production cuts. The price rally was the result of signs of strong demand and concerns about supply during the hurricane season. The overproduction at some OPEC Plus members, most notably Iraq, Kazakhstan, and Russia, continues to be an issue for the alliance, which has tentative plans to start easing part of the voluntary cuts in the fourth quarter of this year, market conditions permitting. Well, it doesn't mean they're going to do it. They're not doing what they're supposed to be doing now. OPEC's top producer and de facto leader, Saudi Arabia, seeks to lead by example and continues to stick to its pledge to pump 9 million barrels per day of crude. But other OPEC producers, including OPEC's second largest, Iraq, haven't complied with the current cuts, despite continuously pledging that they would show better discipline going forward. Well, they've shown throughout history that they can be trusted. OPEC has given the cheaters until September 2025 to compensate for their overproduction in recent months. There haven't been any signs that Iraq and Kazakhstan have managed to reduce their respective output down to their assigned quotas, let alone compensating for previous overproduction. The lack of compliance at some OPEC members signals that the years-long struggle of the group to rein in the cheaters isn't over yet. It also sends a bearish signal to the oil market. Some of the production cuts are only on paper because several producers are failing to cut output as much as they have agreed to under the OPEC deal. And friends, this is not the first time they have failed to comply. Let's see. Piper Sandler will no longer release year-end price targets for the S&P 500 after concluding that the index no longer truly reflects the stock market's performance. I agree. In a video interview on Yahoo Finance, Piper Sandler co-chief investment strategist explained the firm's reasoning. In the last few months, as I was trying to think about raising my target again, I didn't really feel that comfortable, being intellectually honest, saying that I can have a high conviction of where the S&P 500 is going to end up. Nor did I think it really adds value to our clients who are institutional investors. According to a note from Piper Sandler, a small group of high-performing stocks, including Magnificent Seven tech names such as Alphabet, Apple, and Tesla, significantly influence the market's activity. Piper Sandler found that the top 10 stocks represented 75% of the index's year-to-date returns. AI darling NVIDIA was solely responsible for nearly 1/3 of the S&P 500's gains as of late June. I'm so happy to find somebody with a degree who actually agrees with me. We're building a house of cards, guys, and a lot of people are going to get hurt. It's just my opinion. Goldman Sachs asset management executives expect the U.S. economy to grow at a slower clip of about 2% in the second half of 2024. They made that comment just today, with equity indexes seen largely flat due to declining earnings growth and political anxieties. Now, the head of their multi-sector investing over at Goldman Sachs said it's absolutely a soft landing. As the data comes through, that's what we're seeing. Kiss fine. There is a real probability that investors will see interest rate cuts in the United States in the second half of 2024, Rosner added. She does not expect the Federal Reserve to begin cutting until September, but added that rate cuts could continue at a pace of 25 basis points per quarter. As interest rates fall, Rosner said she expected the fixed income market to benefit. She said she saw particularly interesting opportunities in the high-yield bond market and in structured credit. Okay, well, good luck with that. And last news, traders should, now this comes from Morgan Stanley. Traders should brace for a significant pullback in the stock market as uncertainty swirls around the U.S. presidential campaign. I think the chance of a 10% correction is highly likely sometime between now and the election. The third quarter is going to be quite choppy. The S&P 500 index opened the week at all-time highs and will hit its 35th closing record this year if it ends Monday in the green. And it did. I guess this was yesterday's news. I missed it. Expectations that the Fed will cut rates twice this year and excitement around artificial intelligence have propelled the benchmark to a 17% gain since January, after its 24% surge in 2023. Indeed, even a longtime bear like Wilson has tempered his tone for the past few years. Now, NVIDIA has accounted for over a third of the S&P 500's growth this year. It is what it is, right? Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude and gold and silver and euro and bonds. We're in week 310. Over the last 310 weeks, we've issued over 17,000 individual handcrafted alerts, and we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure in a very simple process I teach all of our members in their one-on-one private mentoring sessions. The purpose of the logic alerts is not so you can just trade them and not have to learn how to trade. I know some people do, and someday they'll regret that because they miss the opportunity to learn how to read the chart, read the market. Because until you learn how to read the chart, just like you learn how to read a school book, you can't learn how to trade. Valerie did the recap this morning at 7:30 a.m. I have added additional alerts since then. But at the time she did the recap, we had 26 total alerts issued. We were still waiting on the outcome of 13. Of the 13 actionable alerts, 2 or 15% would have been stopped out based on market structure. That very simple process that we teach all of our members in their private one-on-one mentoring sessions. Now with the logic alerts, you get an entry price, an initial target, which is good for your goal for the day, then additional targets, then a final trade to target. This is how I teach you to read the chart, okay? Just like you're reading a newspaper, just like you're reading a mystery novel. Every chart tells a story. Just got to know how to read it. Now, once I feel that you've mastered the logic alerts, I want you moving on to the CTAs, the concierge trade alerts. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m., because futures trade around the clock and we have traders around the globe. But the CTAs are published as a static report shortly after the Globex open each evening. Yes, we're in the Tuesday session, but the Tuesday session began last night at 6 p.m. Eastern. Just like the Wednesday session will start at 6 p.m. Eastern tonight. So 20 minutes after the open, all of our members and trial members had every one of these targets. And somehow I screwed up the NQ. I fessed up to it when I realized it this morning. And all I could do is apologize, because I don't go back in and change things after the fact. When the report comes out, the first thing you do is go to the 30-minute chart of whatever markets you actually trade. Make a note where price is at the time the report is published. It's always going to be between these two numbers, okay, on every market. Now, you only got to worry about the markets you actually trade. And make sure you're doing this on the 30-minute chart. Once you've made a note where price was at this time, then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to keep you on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Now, the BBC is the green line you'll see on my charts today and every day. It stands for bull-bear cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. Now, that's always relative to whatever time frame you're looking at. Daily, weekly, monthly, 5-minute tick chart, range chart, doesn't matter. Works the same on every chart, every market. But for the purpose of the CTAs and the logic alerts, it's always on a 30-minute chart. Now, this is where you learn to look left and spot all those entries and targets that I taught you with the logic alerts. And it's where you learn how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC, it's trying to reach the zone above. Price is below the 30-minute BBC, it's trying to reach the zone below. Published the zones almost 15 years. Every week since December 14th of 2009. Once they're published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They do not change in any way whatsoever. Once you truly understand how price behaves around and is attracted to a weekly trading zone, zones will become one of the most important tools in your trading toolbox. Just resist the urge to complicate things. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, you know where I'm headed, to the daily chart. Do I trade the daily chart? Nope. Do you know who does? Institutional traders. The ones who have massive account size, hundreds of millions, billions, trillions of dollars. They trade in such incredible size that they literally move price. So I always start my trading session out by looking at the daily chart. I want to see which way the wind's blowing. Are the deep pockets selling? Are they buying? Now, that can, of course, change throughout the session, but before I drop to a smaller time frame and start putting money at risk, I want to know what the deep pockets are up to. If you'll train yourself, no matter what you trade, futures market, any individual stock, any crypto, any Forex, any ETF, if you'll train yourself to spend 2 minutes with the daily chart before you actually start trading, I do believe you'll see your results improve over time. Now we got a new high again today, 56.42.75. See how close we can get. 56.42.75. We got it right on the nose. That's a rarity. It's hard to do on the daily, but we did it. Now, price may trade through it, but this is really important. See the 100% fib extension, which goes from the low of April 19th to the high of May 23rd to the retracement low of May 31st, gives us a 100% fib extension up at 56.71. You see, man has never traded here before, so looking left won't do you any good. So we take the 14th century math that people use for fib retracements, and we use it in a different way with this little tool right here. And that projects into the future. To show you how important these extensions are, we spent 1, 2, 3, 4, 5, 6, 7, 8 days finding support at that 62% fib extension before we finally got above red and falling, which surprised me. And then the step line, when the step line crosses the BBC, you should expect a pull. When the black step line crosses blue and climbing, you should expect a pullback to the BBC. But that didn't happen here because of all this consolidation. The BBC actually rose to meet price. Now the pullback holds more often than not, whether you're on the daily chart or the 30-minute chart. So since we can't look left for information, we use our fib extensions. 56.71 is where the market's trying to get to. Now, if and when price reaches 56.71, I will erase these fib extensions and I will go from this low to this high to this retracement low, and that will give us some more upside targets. But before I do that, we got to get to this one. Okay? All right. Michael should be here any minute. Let's go ahead and jump to the ES. Now, I was at a mentoring session yesterday, and we drew in this window of opportunity, and then we drew in this window of opportunity. Price was sitting up here. It came down and filled that window, and then in like an instant, it filled the second window. Then it backed all the way back up and filled the first window a second time. The market loves to repeat itself. And then last night when the markets opened, it filled this window of opportunity. Okay? Now, these down here, I was just showing examples, but the point is that you can plan your work ahead of time. You don't got to stare at the charts all day. You can look at the chart, identify the windows of opportunity, draw them in, and then set your alerts to notify you when price gets close to this window or close to this window. But this one here, no sooner had we drawn these two windows in, and bang, came right down to the zone. Now, when price rallies up to a zone, we expect resistance until proven otherwise. When price drops to a zone, we expect support until proven otherwise. 70% of the time when price encounters a zone, you're going to get consolidation. 20% of the time when price hits a zone, you're going to get rejection. 10% of the time, you'll get what's called the slice. On the 30-minute chart, this was a green candle right here, all the way to the top. But before, so in other words, this candle sliced through that zone like it wasn't even there, 27/28. But when it ran out of steam, what did it do? It retraced to the zone it sliced through and then continued in the direction of the slice, filling that window that we had drawn. We drew that window around 2:30. I did a special session yesterday because of my schedule. Okay, so this candle opened at 2:30. This window didn't fill until 7 p.m. last night. So what I want you to understand is that you can plan your work ahead of time. Okay, price can only do one of three things: go up, go down, and for a while consolidate sideways. But it always moves in legs. Leg, retrace, leg, retrace, leg, retrace, leg, retrace. So did we hit our long target? Yes. Was there ever any reason to concern ourselves with the short target? No. You see, this vertical line separates today, Tuesday, Monday, back over here is Friday. So that's not important because these weren't the zones back on Friday. Last week, there was a different set of zones. Okay. So if price drops to 56.29, you've only got 1 point to get to the zone, 27/28. Could you try to squeeze out a trade here from 34? No. There's just not enough room. For now, I don't see a tradable opportunity in the ES. And you might say, yeah, but that's all I trade is the ES. Okay, so you're going to have to wait. Or once you understand that we trade every market exactly the same, now there are special day margin rates for the ES and the other indices. You start getting into crude and gold, you got to deal with higher margins, but as long as you have enough, money in your account to cover that margin, then you can just scan through and see where there is opportunity. There's no opportunity here right now in my world, okay? In my 30-minute roadmap world. Now, if price were to really start tanking, and I don't just mean today, but I mean till Jesus comes home. If price gets down here, that's a valid window of opportunity. And if price takes out the low of that candle, this is a valid window of opportunity. And then if price continues down, this is a valid window of opportunity. And there's nothing that can happen to change that, short of Jesus coming back first. I don't care if it's a week, a month, or 10 years before price comes back to this area. It will still be a window of opportunity. And I hope you can grab a hold of them. So important. And I want so desperately to see each and every one of you succeed. Okay, here's where the market opened last night. We got above the BBC, we got a little leg, we got a little retracement. We tried to get to the zone overhead, but buyers just weren't buying it. So we dropped back below the BBC, blue and climbing turns to red and falling, and we drop to the zone to the tick. When the market finds support, it will always go look for resistance. The pull back to the BBC holds more often than not. The pull back to red and falling holds more often than not. So as we come down, you see we get a retracement to the BBC and it holds. Here we get a retracement to red and falling and it holds. Now the zone down here is 430/435. So we didn't quite make it all the way to the zone. We got to 450. Happens. Now, from this support, which can be found over here, but look at what's happening with this candle. This zone is 745/750. We have sliced through it on the 30-minute chart. So now here's what you do. Wait for this sucker to run out of steam. This price rarely travels in a straight line, okay? And this is a pretty long time. So let this run out of steam. Don't go chasing it, okay? Because the second you start chasing it, it's going to reverse on you. It'll run out of steam. It will most likely retrace back to the zone it sliced through. And then as you take out the swing high of this candle, wherever that happens to be, let price get above it and party like it's 1999 all the way up to the next zone. Okay, Michael has joined us, so we will pick up with the Russell when I come back. But right now, Michael's going to give us a recap of everything that happened this morning in the live training room. Then we're going to go live on TradingView for 30 minutes, do some live trading. But I'll be back. We'll finish the recap of the alerts, and we'll wrap it up with our good word for the day.
All right.
Michael, that looks good.
Great. All right. Let me just do this really quick, and then this, and see if that works. And this, and that, and that. Okay. So here we are. Good afternoon, everyone. Today is, oops. Hang on. Today is Tuesday, the 9th day. Just lost my train of thought. The 9th day of July. If you have not taken a free trial with us and you'd like to take a free trial with us, go here to mytradingiq.com and click on this purple button right here. Now, when you click that purple button, you will be sent a link. Well, you'll be sent actually to this registration page. All you need to do is fill out this form. All we ask for is your first name, your last name, your email, and your phone number. These are all quick little drop downs. I'm down here at the bottom though. If you are taking a free trial with us, you should definitely do this, okay? Come in here and give us your NinjaTrader machine ID if you have it, and also give us your TradingView login ID if you have it. All right, your username or login ID. It's not your email. And if you have Ninja, you should also get TradingView. Give us your TradingView login ID. All right, all that stuff is, you can see how to get all that stuff on the platforms link on our webpage. But anyway, just fill out that form and be sent everything you need into the room in the morning. Now that platforms link is right here, trading platforms. Anybody that's taking a trial with us, you should definitely get TradingView. All right, you get a 30-day free trial with that. And last week they were having a super sale. I don't know if they are anymore, but I know last week they were having a super sale. All right, spreadsheet. We had a pretty good day today. We got the goal on the very first trade. It was a quick, really fast goal this morning. I know I put down 5 minutes, but it was really like about 30 seconds. Because it took 5 minutes for the trade to materialize. But once I actually put the trade on, it was bing, bonk, goal for the day, plus 30 ticks. was an NQ trade. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, made 112 ticks on the NQ, 4 ticks on the Russell, 8 ticks on the YM, and we lost 10 on the ES. Put us at plus 495 in the morning session. Today it took 5 minutes and a single trade to get to the goal. At that point, we're up $2,850. We took a total of 17 trades this morning. So on the month now, we're up $1,635 over 6 trading days, averaging $272 per contract per morning session. On the year now, we're at $48,720. That is over that is over 126 trading days, averaging $386 per contract per morning session. Now, 386, it's a great number. If you can get that every single day with one contract, that is awesome. And what you want to be able to do is add contracts and build up. Trade fewer times with more contracts is what you want to be able to do. And that's what the 24/20 blueprint is all about. Working your way up from one contract to multiple contracts, 1 month at a time. If you started that this year with one contract, quit trading when you got the goal for the day, the goal being $100 per contract, and added a contract per month, you'd be at 7 contracts now. And you would be averaging, you would have only had to work 44.25 hours so far this year, and you'd be averaging $1,429 per hour. Now, if you started with me in January of last year, you'd be at 19 contracts now, 19th month, 19 contracts, same 44.25 hours, but $6,354 per hour. Okay. You see the difference, how it scales. All right. Let's get into the trades. I don't know why I have 2 of these open, but I do. I'm going to shut this one off because I don't think that's the one that I was using. I think this is the one I was using today. So we're going to stick with this one. And we'll get into the trades. Hopefully this is the one I was using. It is. Okay. On the YM, we started out with the YM. We only had 1 trade on the YM. We only took 1 trade on the YM. It was right here. We got 8 ticks profit on that 1 trade. We did have some more purple arrows, a bunch of purple arrows and blue arrows in there. This would have been a profitable trade. This would have been probably a break even for me, but this would have been a nice profitable trade. That one would have stopped me out if I'd have taken that. That was during the break, and the outer bands were really flat right there. I probably wouldn't have taken that. This one I would have taken, and that would have stopped me out. This one here you'd still be working on, right? But I wouldn't have taken that going right into the zone like that. We ended up with plus 8 ticks on the YM with just 1 single trade this morning. Now let's go to the Russell. Okay, on the Russell, let's go all the way back here. Okay, on the Russell, we had just 1 trade on the Russell today. Right, there was a lot of no trade zone in here today. A lot of no trade zone in the first half hour, 45 minutes. This was 1 trade we took. We picked up 4 ticks profit on that. The next green arrow worked out pretty well, and that was it. We really didn't have all that much more going on there. Okay, and that was the Russell. Now the ES. The ES has gotten a lot of sideways movement today. As you can see the whole day right here on the ES, right? We had our 1 break-even trade right here on a purple arrow, but you see the whole day right here on the ES. We had a blue arrow here that was a valid trade that worked out to some degree, about 8 ticks in profit on that one. Then during the break right here, there was another blue arrow that would have been a break-even, and that's it. Now we have Powell talking today and Powell talking tomorrow, and then we have CPI and PPI coming out at the end of the week, Thursday and Friday. So those are the big things. And I think the market is really sitting on its hands until that all happens. Now the NQ is where we had the majority of our trades today, and I'm going to do it the hard way here today and scroll all the way back a little bit at a time like this. All right, here we go. This was our very first trade of the day. I told you it was like in and out really quick. 9:29 to 9:29.46, something like that. It took less than a minute to get 30 ticks profit on that. Then the next one came up, we got 30 ticks profit on that. Then the next one came up, and we didn't get anything there. Nothing there. Then we stopped out on that one, put us down to 40. Picked up 4 ticks there, get us to 44. 30 ticks there to get us to 74. Stopped out on that, back down to 54. Break even, plus 8. You see there were some nice trades in there, some blue arrows, and purple arrows, and everything else in there. But plus 8 to get us to 50. I'm sorry, plus 4 to get us to 58. And then break even, and plus, looks like 4 to get us to 62. Then plus 30 to get us to 92. And then plus somewhere in here. somewhere in here, right there, plus 16 to get us to 108. That might have been the final trade. Yeah, I think that was a plus 8 to get us, no, plus 4 to get us to 112. Somewhere in here there was a plus 16 to get us to 108, and then there was a plus 4 to get us to 112. I think this might have been plus 16 right there. I'm not sure, but we did get up to 112 on the NQ today. So the NQ was really tradable compared to everything else. And we used the NQ for our lesson plan today because it had so many good examples. All right. Well, it is 1 p.m. and that is the recap of what I did this morning. So now, for those of you folks who are watching over in YouTube, you may recall yesterday, I think it was in here yesterday. I don't know. You guys tell me. Was it in here yesterday that I brought up the options and I showed you the options on Tesla yesterday? I believe it was. And if I go in here and I look at, that does not look like what I'm looking for at all. I click that and then that. Last week, today, new folder, 1. That's not what I'm looking for at all. Here they are. Okay. So this is what I showed you yesterday. I didn't do a big enough screenshot to show you the time and all that, but it was in this session yesterday. I was saying we got a long opportunity had triggered on the Tesla. And I was saying the 255 calls looked pretty good. They were at $5.05 at that point yesterday. So I followed them today all the way through. I followed them today. And they went from $5 yesterday to $6.35 at the first spot this morning to $7.60, well, $7.74 we'll say, at the last one right there, to the 255 is what we're looking at, to 8.59. And that brings us all the way up to right now, where they are $11.61. So yesterday, these $5 calls, they were at $5.05 yesterday, are now priced, same ones are priced at $11.61, up $5.71. So that is all from this actually. But if you can do it here with Trading IQ. You can go out here and get your long signals, and you can trade options on long signals using Trading IQ. That was from TV Trades yesterday. I think we're looking in here. I might have been looking at this. So I know this is GameStop here, but how's GameStop doing today? It got all the way up to 25. Okay. This was Tesla. And Tesla actually was a lot higher today. The range of those options today was much higher than it is right now, because Tesla got all the way up here at one point, all the way up to 65. So if I actually click on it and I click on more, the range of the option, go to contract details. Today, today's range, it was up to $13.20 at one point today. $13.20. I think I can bring that over and show it to you. Here's the day's range, $4.55 up to $13.20. So that $5 investment yesterday almost tripled overnight. Just showing you what you can do with all this stuff. You can do that same stuff using the blue arrows here on the same time frame on Tesla. You can do all the same stuff using all of the things that we have all over the place. All right, enough of all that. Then you get over here. Nobody's asked any questions yet. Nobody's asked a single question. So I will just do this really quick. I think I would do this really quick. Hold that thought. Okay, and save this. 6 today. All right, that's going to be for the webinar tomorrow. I'll go over that in more detail. Now, back to the trading in here. We are the ribbon is just getting above the weekly trading zone here on the NQ. That is making that a prime spot for it to bounce off of. So let's get ready to take a trade on that. We're not quite there yet, but we're almost there. Now we are there. We're right in the zone. I'm looking for an up close out of the zone right here. Okay, an up close out of the zone would probably be a good trade. If it doesn't drop down any lower than that, probably have a green arrow right out of the zone right there. That'd be a pretty good trade, I think. If it closes down, it's going to disqualify the trade, but if it closes up, it should be a decent trade right here on the NQ. So that's what we're looking for the up close. See how it's getting all choppy right here inside the zone. It's got a low here of 67.75, so you're going to have 175 on the upside. Okay, 4 points above the bottom of the bar is what you want to buy. 4 points above the bottom. All right, we got a down close. So that's probably going to disqualify the trade. That is probably going to disqualify the trade right there. Over here, yep, and over here on the YM, we're testing the ribbon the same way we just did, except there's no weekly trading zone involved on this. There's the midpoint between the zones that's involved. No actual zone that's involved on this. There's the green arrow, and that's what we were looking for a minute ago over there on the NQ. But we got it on the YM instead, so here it is. Along the YM, the stop is 10 ticks away. What we anticipate, we always anticipate, is that price is getting up to the prior swing high up here at 818. So it should get all the way up here. That's also the high of the day. That's where this should go. All right. Now, as it moves, we're going to use our risk management strategy and follow the stop to break even after we get 4 ticks in profit, because that's what the rules say. All right. Everything else is starting to move a little bit here, just a little bit. And there it is, 4 ticks in profit. So open those, drag that stop up and drop it right to break even. Now, we're in the optimal position. We have no risk at all on this trade. Okay, right there is the prior swing high. So right there is where it should go up to. I'm just going to throw the target right there where it should go. That's plenty for me. If it gets all the way up there, that's 16 ticks. That's plenty. 16, 26, 2. That's 26 ticks up there. All right, it ended up giving me a break even, but it should still go up there. Right, it should still go up there. If it does go up there, 26 ticks is enough to be the goal for the day. All right, 26 ticks is the goal for the day, and then a little bit extra for anyone who is watching. Now, if I go through the spreadsheet, let me just explain the whole goal for the day thing. You know, every business month has about 20 days in it, 20 business days, right? So if the goal for the day is $100 per contract per day, then on a given month in 20 business days, you should get to $2,000, $2,000. You should get to $2,000. And if you get to $2,000, you've earned enough to add another contract, right? That's what the 24/20 blueprint is all about. In here, if you started out with $1,000 in January and you quit trading when you got the goal for the day and you did it just like me, then you made $3,162 with 1 contract in January. In February, with 2 contracts on, you made $5,427. March, with 3 contracts, that much. April, with 4 contracts, that much. May, with 5 contracts that month, that much. Last month with 6 contracts on it. We went down in this month because we had a couple of days where we had technical issues, and so we went down a little bit in that month. Right, that is the 6 month. Now, this month so far, this is where we are. We are 6 days in, and we're at $5,775. So we're with 7 contracts on right now. We are averaging $400 a day. Well, I don't know. Let's just see. What is that number? With 7 contracts on, it's $5,775. On the day, we're in 6 days right now. Divided by 6, with 7 contracts on, we're averaging $962 per day. right now. Okay, $962 per day with 7 contracts on. And only working so far this month, not even a whole hour, only working 39 minutes. That's not too hard to take. You know, if you go up here and look, total number of minutes so far, number of trades, I'm sorry, the total number of trades to get the goal, 1, 2, 3, 4, 6, 8 trades to get the goal so far in 6 days. And what did I say? 39 minutes, something like that. Yeah, 39 minutes. And when you break it down like that, it makes you wonder why anybody do anything else. All right, so over here on the YM, we did move up. We came back down, bounced off the ribbon again. It's got to put in a higher swing before we can take another trade. We ended up with a break even on that. That's got to put in a higher swing. Over here on the NQ, we did bounce off the ribbon, but gone sideways here a little bit, consolidating at the ribbon. No higher swing or any kind of a trend over there right now. The outer bands are saying there's still a bit of an uptrend. You're not going to have a trade here because you're not coming out of the oversold. We never got a green or a blue arrow all through here. You're not going to get one right now either. Okay. Let's go look at Bitcoin because I thought Bitcoin had a pop today too. I was looking at it on the 5-minute chart. We got on the 30-minute chart, I suppose. So on the 30-minute chart, had a long back here at 12 o'clock. Still working on that. And on the 5-minute chart, we had a long back here at 11:55. This first candle right over here, well, not first candle, but the first one after we get this long trigger right here was a huge candle. Since then, we've had this one right here that is still working on. The targets on that, the first target's 58,122. So we haven't gotten up to that yet. I guess that'd be right here is the first target for this candle. Right, the next one is going to be 58,200, which isn't much above that. If we look left, it's already figured it out for us. And then the next one is 58,448. So this, if you look left over here, there's got to be some pivots over there on that side. Okay. All right. Let's bump this back and take a look in here. See, now right here, we have the green arrow that still is not put in a higher swing. So what this is telling you right here, guys, this is what the leg lengths were like. There was some really nice leg lengths right here, and then they just died right here. The leg length died. So this consolidation that is taken right here, you see how the pullback right here was only that big? This pullback was this big. It was like 3 times the size of that pullback. It's something that's losing strength on the upside. So for right now, the high of the day at 39,818 on the YM looks like it's going to hold. Now, I don't know if those are all-time highs on the YM or not, but we'll see. Looks like it's going to hold for right now. All right. Does anybody have any questions? Has anybody asked a single question yet? I don't see any in there yet. Jimmy. I will check on that. Jimmy, are you in here right now? Jimmy C. I just saw your email. No, Jimmy C is not in here right now. All right. Okay, let me minimize that. And so we have a green arrow here that's going right into the zone. We're not going to do that. We're showing more weakness over here on the YM. More likely that it's going to turn down right here. The Russell, it's got a decent leg length, but if you look at this leg length and then this leg length, you know, it's the pullback and the pullback. This pullback's a little bit bigger. The leg length is a little shorter. So that is showing weakness too. What that becomes is a rounding top. Okay, rounding top. That's what happened over here. We had this leg length, then this deep pullback, and then this smaller leg length. That made the top round. All right, and you see that we got the green arrow over there now, but it went up like this, and then it went down like this. And that's the beginning of what's happening over here. Okay, you see the angle right here was like that, and then the angle tipped over a little bit like that. And so now the next thing is going to be, it's going to come down here, and it's going to bounce up, and it's going to put a high like in here somewhere. And that'll finish the rounding. This one right here is doing the same thing. So you had this angle, and then the angle went like that, and now the angle's going to go down like that. This one, same thing, at this angle. Now the angle's gone down like this, and so now it's likely to go down like that. They're all putting together rounding tops and showing weakness right now. You guys see that? And there, that green arrow worked out really well. So now finishing the rounding top, it's got to pull back up into here and give us something else on the downside. Pull back up into there and then give us another thing on the downside. And there, we pull back down and tested the ribbon here. Now what should happen here on the Russell is we should get a trade opportunity here that does not meet the prior swing high. That's what should happen here. We should have a weak trade opportunity that moves up but does not hit the prior swing high. Okay, so is that a trade opportunity you want to take advantage of? Probably not. It should go a decent amount though. It should go up to like right here, is what I'm thinking. Okay, probably right up to this area, right up in here. When it does finally turn around and start to snap back a little bit. We'll see. It's not going to give us a trade setup. That was pulled too deep. So it's not going to give us a trade setup. And you see the NQ is just tanking over here. So we may get something there. We may not. I do not know. Okay. All right, so we're looking for it to pull back up here, test the ribbon. Looking for it to pull back here, test the ribbon. Once it does pull back over here, see the retracement level of this now is going to put it right about at the ribbon. So this is probably not going to get hit anytime soon. This thing up in here, probably not going to get hit anytime soon. Everything is turning down. So did you guys all see how the rounding tops just formed right there in front of us? Everything just happened right there in front of us. All the weakness showed and all the markets turned all at the same time. Now, the thing you have to consider, and I went over this a little bit in the morning session. We're going to have a trade here on the NQ. The thing you have to consider is this just a bigger pullback in a larger uptrend? That's what you have to think about right now. Okay, that is the big consideration here. And if you blow this up, let's do this. We'll blow this up and we'll look at it this way. It doesn't look like it is. It looks like this should actually go down. I just took 30 ticks profit on that NQ blue arrow. Sorry, I'll show you the actual print in a minute here. But this does not look like it's pulled back on a bigger uptrend. This looks like it's a continuation of a downtrend right here. Right. So this was a pullback in a downtrend, is what it showed. All right. And I just made 30 ticks profit on that blue arrow short. I'm sorry, I didn't bring my down over. Actually, I was talking through the whole thing, but I will show you the actual print. Find it. Hang on. Scroll down to the bottom. All right. Well, it didn't round out to be a full 8 points, but I got the 30 ticks. I'll show you. Yeah, I already saved this, I think, right? Save this. And oops, that's not a very good picture. And do it again. Okay. Here it is. I sold up there with a limit, and I bought it back down there with a limit. So it was, yeah. Well, that's where my limit orders were, but you can see I didn't fill exactly at the right spot. But pretty close. Pretty close. Lost a little bit in slippage. But that was 30 ticks right there. Okay, almost 31. All right, so we are now putting in the lower swing that we need. Almost have the lower swing that we need. Not quite. You can't take that green arrow because this blue arrow didn't put in the lower swing. No, it did give me 30 ticks. We need to get down below this level right here. It's just about got it. The YM went right down to the weekly trading zone from the blue arrow here. That might have stopped me out to the tick if I had taken that. Might have stopped me out to the tick exactly. This has got a 1 tick lower swing right now. The NQ does. See that one little tick right there? It's saying that this is the prior swing low right here, given the target off of this blue arrow right there. Okay. So it's got the potential to go down again and hit that bottom again right here. Now the midpoint between the weekly trading zones is this dashed red line right here. That dashed red line, we're about to get no arrow at all here because we're not in the order above. But the dashed red line right here is where price seems to be wanting to go. Right, the midpoint between the weekly trading zones. Okay. Does anybody have any questions about anything? Anybody want to see anything other than what's going on in front of you right here? All right. Just going sideways here into no trades, and we're not going to have any trade there. And we have about 6 minutes left. So I don't know that we're going to need another trade. We're getting through the weekly trading zone here on the YM. We are at the weekly trading zone on the Russell. We don't have anything here on the ES that I want to do. I have one trade on the ES. No, I have 2 trades on the ES, one break even and one -10. So the NQs where we're making all the money today. It seemed like yesterday the NQs were, yeah, we were -20 on the NQ yesterday, but up 142 on the NQ right now. So we usually get it back pretty well. Pretty well and pretty easily. Me. All right, so we've gotten down to the midpoint now, which is where I thought we were trying to get to here on the NQ. We've gotten out of the no trade zone down to the midpoint. And it looks like it's got more momentum on the downside right here. Same thing over here on the YM. The YM's gone through the weekly trading zone. Now, what could happen here on the YM? This could be a good trade here on the YM, the way this is coming together. The ribbon is going to be right there in the middle of the weekly trading zone. Hopefully, it's going to go down a little bit more. Go sideways, one more bar on this. This would be a better trade, I think, on the YM. Watch the NQ, though. The NQ is pulling back or overbought. It's going to give a green arrow here. That's a really deep pullback. No more than this. Be 30 down to 26 is what you'd be selling there on the NQ right now. 30 down to 26. Over here on the YM, we pulled back up. We're testing the ribbon. We need the down close. There's a 26 over there on the NQ. On the YM, we are getting into the ribbon right here. This is kind of what I wanted. I wanted to go down a little lower. I'm short the NQ. I'm going to throw my stop at break even here. I should have had a break even already. I hope it doesn't stop me out. It's going to stop me out. Crap. I should have had my stop at break even on that. That was my fault. I was not focused on it. But I did get the short, and I should have had my stop at break even, maybe even locked in a point. On the YM right now, that is a 20-tick stop out right there, by the way. Right, on the YM right now, we've got this high right here at the top of the weekly trading zone at 49, so I'd be selling 41 on that. Selling 41 on the YM. Okay. This is what it looks like. Yeah, that's correct. Okay, if this bar closes up, we're probably not going to end up with a trade. And we're running out of time anyway. We only have 3 minutes left. But if this bar closes up, we probably won't get a trade. If it closes down, we'll be in. And it doesn't have a huge run down to the swing low. Okay, so it did close down. It did put us in. It is a blue arrow. It doesn't have a huge run down to the swing low, but this number right there is looking pretty appealing to me. And the low of the day is way down below us somewhere. I don't know where the low of the day is, but it's way down below us somewhere. All right, now our stop should be 10 ticks. Should be 10. It slipped me a tick, so I'll put it at 11. And that one just stopped me out. So between the mistake I made on the NQ and that stop out right there, you know, I doubt that 30-tick trade I made on the NQ right there. It's all right. Get it back. We will get it back. All right, over here on the NQ, we're testing the ribbon. There's a chance for a long trade here. Chance. We went right through the ribbon. This one over here. Nothing I can do with that.
That NQ just fired.
Oh, it did just fire. Thank you.
I don't know if you want to take it or not, but it did fire.
Well, the outer bands are kind of flat on this.
Yeah, they are.
That's something
Yeah.
I'm right here. See, the outer bands are pretty flat. I was looking over here at the NQ and I was wondering what went wrong with that one. I feel like I should have had my stop at break even, but I did get to take a slip, so I wouldn't have had a chance to get my stop to break even. That's what I was looking at. The outer bands are really flat here on the NQ, though. I did get the trigger, you're right. And I should have probably had an alert that popped up over here while I was looking on this side. And I didn't even notice. Anyway, I think we're about to wrap it up.
Now, Michael, let's say that someone had taken that NQ trade,
Mhm.
and you see how we went after the trigger, we went into a no trade zone.
Mhm.
How should people handle that? Should they exit immediately or
No,
stay with
not
it?
at all.
Stay with it.
Stay with it. The
Okay.
thing about the no trading zone is it's to the point where the outer band is suggesting you're in a flat spot,
Right.
but it's got to come out of the no trading zone eventually. And
Sure.
you're in where the market is suggesting it's going to go up. So just because it went in no trade zone means you're in at a point where you're going to be in some chop. But that's a good point to be in. If you're going to be in something that's going to be in chop, you're right in the middle of it all.
Mhm.
You know, you have all the way down here is where your stop is, and all the way up here is where your target is. So you're right in the middle of it all. So just let it go and work itself out. Eventually, it's going to come out of that chop. And what the arrows are suggesting is it's going to come out on the upside of that chop. So what's going to happen to make that come out of the chop is it's got to get up out of the chop. No, it's got to get up out of, like, exceed this prior swing high, And then when it pulls back, it's going to spread those bands out. So it should get up here, hit your target, then pull back and give you another opportunity in the same direction is what it should do. So you just manage it the way you would always manage it. No rush to do anything different. Manage it the same exact way you would always.
I just know that's a question that some people have, so I want them to hear it from you.
Yes, that is what I would suggest. And you probably see it happen here. Okay. Remember all the rounding top stuff I was showing you earlier? We now have rounding bottom stuff happening right now. You see, this pullback was deeper than the last pullback. This leg down was shorter than the last leg down. So right here, if we put in a higher swing, we have higher lows and higher highs. Everything's starting to round up. Right here, the same thing. Same thing over here. And not quite on the YM yet, though. YM did eventually, after stopping me out pretty much to the tick on that, it did go down, put in a lower swing. But see, this is working out just like I thought. It's going to put in a higher swing here, and then pull back, spread out the bands, give you another opportunity off the ribbon.
Now, when you're done, I'm going to share something with you before you take off.
Okay. Well, I'm going to show everybody how to take the free trial right now.
Okay.
If you have not taken the free trial, go here to mytradingiq.com, click on the purple button, and that'll bring you to this registration page. On this page, all we ask for is your name, email, phone number. Down at the bottom, gives you TradingView login ID if you have one. Gives you NinjaTrader machine ID if you have one. If you have NinjaTrader, you should also get TradingView. All right, charts are better, and they have everything that we have. All right, that is it. With that, I can pass it back up to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park.
Okay, before I go punching all those buttons, let me just share with you what I shared with the audience earlier. Piper Sandler, which typically deals with institutional clients, their co-chief investment strategist said this today. In the last few months, as I was trying to think about raising my target again for the S&P 500, I didn't really feel that comfortable being intellectually honest, saying that I can have a high conviction view of where the S&P 500 is going to end up. According to a note from Piper Sandler, a small group of high-performing stocks, including Magnificent Seven tech names such as Alphabet, Apple, and Tesla, significantly influence the market's activity. Piper Sandler found that the top 10 stocks represented 75% of the S&P 500's year-to-date returns. AI darling NVIDIA was solely responsible for nearly 1/3 of the S&P 500's gains so far this year.
Yeah,
I mean, we got 500 large cap stocks riding on the back of just 10 stocks. And a third of the S&P 500's gains for the year are on NVIDIA's back. So he said, I'm just backing away because this does not make sense. So anyway, I just thought it might be good for you to hear that. Yeah.
Well, thank you for that.
You bet. And I will now click this and click this and then click that. And then I will ask you the all-important question. Recap of the morning session.
Today it took 5 minutes and one trade to get to $2,850. 1900.
That makes for one sweet Tuesday.
Yes, indeed.
All right, guys, we will now pick up. Thanks for everything, Michael. We'll pick up where we left off with the Russell. Now, again, I've explained the vertical lines. Separate today, Tuesday, from Monday. And these zones don't count because back on Friday, we had a different set of zones. But the zone down here is 2038/39. The swing low was 2039.30. Now remember, these zones were published yesterday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. So yesterday on the Russell, we had a very nice rally right up to the zone. And on 30-minute candles, we tried 1, 2, 3. basically 2 hours, we tried to break through that zone. And when the market finds resistance that it can't get through, it's always going to go look for support. Initially, it found support at the BBC, which bounced it up to the step line, which sent it back down to support at the BBC and the weekly trading zone. That's what I call support times 2. And then we climbed, but we weren't able to make it to the long target, which tells us there's weakness in the market. And as price drops below the BBC right here, this candle opened and closed below the BBC with red and falling overhead. You should be shorting that baby right down to the zone. Now, when price reaches a weekly zone, 70% of the time it will consolidate like this and like it did yesterday. 20% of the time it will get rejected like it did here. 10% of the time is the slice, which I showed you earlier, but this candle, yeah, kind of sliced, but when it ran, we'll call it a slice. Sliced through the zone on the 30-minute chart, but when it ran out of steam, what did it do? It retraced all the way back to the zone it sliced through, and then it continued in the direction of the slice all the way down. We came within 3 ticks of hitting the zone, which is, see over here, we fully hit the zone. So coming out of the gate, we didn't quite make it to the long target, but we certainly moved enough for you to get your goal for the day. Then when the markets turned on us and headed lower, oodles of room down to the zone. Let's say you didn't get short to 2058. Okay, that's 4 points down to the zone at 53.54. Then after the consolidation, from say 2050 to 48, 2 points, go for the day. Bounce back up to resistance, then all the way to the zone. That, let's say you were very conservative and you waited for price to take out that low. 2045 down to 2039.3. We trade every market exactly the same. Now, a lot of people will tell you can't do that because different markets have different personalities. We're not looking for a relationship. We're just looking for a high probability, low risk trade opportunity. Now, right here, as I've told you, the pullback to the BBC holds more often than not, okay? But this candle, this was a huge green candle. Now it got right there and stopped. Why? Previous bearish cross. Whenever you have a bearish cross, that means the red line gets below the green line. You have a bearish cross that leads to an extended move. The first time price revisits that area, it will almost always be good resistance. So that resistance has now sent us back to support times 2, the BBC and the weekly trading zone. And you'll notice down here, the red and falling has curled up to become blue and climbing. Bullish, bullish, bullish. what's the highest candle? 2057 to 2059 would not be a bad trade. It's certainly one I would be willing to have a whack at. Beyond that, though, I would let price get above the long target, and I would trade 2067 to 69, and that would be go for the day. Okay. All right, let's move on. Now, on the NQ, I already admitted publicly come on. I screwed up the NQ CTAs. I hope it's the only one. So I went and checked all the other ones. I didn't discover that until this morning in the live training room. So my apologies, but I don't know what I was thinking, or maybe I just skipped it. I don't know. Anyway, but a reminder, all of our members and trial members had all of these targets last night, 20 minutes after the open. So the NQ, not much I can say, except we opened here, we traveled sideways, we got below the BBC, came down to the zone support, bounced up to the BBC resistance, and then we came back down, and this time we managed to trade through the zone. And the market found support. Look left, follow the horizontal line on my cursor. You see why the market found support there? If not, I'm not going to show you. Okay? That's why we're bouncing. But we got massive resistance overhead. Step line, weekly zone, red and falling. And even if it were to spike the zone, then you got the BBC. So, where would I trade this short? I wouldn't. I would not. I would wait for price to break through this zone. I'd just go look for another market. If the NQ is all you trade, well, then maybe you just go look at it. You go fix a sandwich or walk the dog. All right, moving on. Crude oil. Here's where we opened last night. We pulled up to the BBC. Remember, pull back holes more often than not. So we get a little leg. Now, this candle opened at 82.15, and this candle dropped all the way to 82.04. So that would have been enough for the go for the day, right there. But the market found support where? Right where you would expect. That bounced it back up to the zone, 82.30/82.35. And then we come right back down and we hit the short target, which bounces up to resistance. Support will always send the market to resistance. Resistance will always send the market to support, which will send the market to resistance, which will send the market to support. Now, if I were to scroll left, I could show you why there was support here. But that's also why you need to become a member, so I can actually teach you in one-on-one mentoring sessions. Would I sell 81.60 down to 81.50? Yes, I would. Doesn't mean you should. Or more conservative, 81.40 to 81.30. Either one of those would give you your goal for the day. And if it's a forceful move, you might catch them both. And that would be your goal for the day times 2. Gold. Here's where we opened last night. We had prices trapped. We got resistance overhead, blue and climbing, support below. We managed to eke our way up above the BBC. And sometimes this will happen. You look left and there's no true reason, okay? But that's rare. Once you learn how to read the chart, there's almost always a reason. So the resistance here, buyers simply stopped buying. So we dropped back to the zone, support. And what did? We consolidated. Bounced up to resistance, dropped back to support. And then we bounced up to here, okay, which was shy of that high, which just to me indicates weakness in the market. And now we are consolidating at the zone. Silver. Silver opened trapped, support below, resistance above. We overcame the BBC. We got a leg and we got a retracement. The pullback held, and it sent us right to the target, resistance. Now that resistance is from this bearish cross. Resistance sent us to support at the BBC, which sent us back to resistance at the same spot. And then we drop back to support at blue and climbing, which sends us back to the long target again. We consolidate, we pop up to the zone, we come back to support, we go back to resistance, we come back to support, and we trade down to, look at the horizontal line on my cursor. Do you understand why that stopped the market from falling? Previous support. Support sends us to resistance, and resistance sends us to support. Price is always trying to get to a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon. Price is below the 30-minute BBC, it's trying to get to the zone below. If price is above the 30-minute BBC, it's trying to get to the zone above. That is a beautiful example. Hey, and the good news is with silver, it only takes 2 pennies to get your goal for the day. Like this candle here opened at 31.16 and it ran up 10 pennies. $500 per contract traded in that one candle right there. Last but not least, the euro. We opened and ran up to resistance, and we just kind of wishy-washy. We finally hit the short target support, which bounced us to resistance, which sent us to the zone support, which sent us back to the BBC resistance, which sent us back to the zone, and we've now traded through the zone. Okay, keep in mind there's potential support there, and you see this bullish cross way back from, let's see, Tuesday, Monday, Friday, Thursday. You had a bullish cross way back here. When you have a bullish cross that leads to an extended move, the first time price revisits that area, it will almost always be good support. And here we are at the daily candle. Do we have a slightly new higher high? Did that happen? 56.45.75, yes. So let's try to do this again. 56.45. Oh, it's so hard. Okay, so we're 2 ticks off. The highs 45.75 and we're at 46.25. Okay. And the next major resistance, because there's nothing looking left except the high of the day. After the high of the day, the next potential resistance is the 100% fib extension. We hit that, I draw new extensions from here to here to here, which will give us more upside targets. Okay. All right. To become a member, it's pretty simple. Go to mytradingiq.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. When you become a member, you'll have access to the live training room 2 hours every trading day. 9 out of 10 new traders fail because they don't have a living, breathing teacher to teach them in an interactive environment. But our members do, 2 hours every trading day. Plus, they have around-the-clock support via Telegram. Along with 2 hours in the live training room every day, our members enjoy private one-on-one mentoring at no additional charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a member, you'll get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones. You'll be able to attend the Thursday night members-only workshop, and you'll get the golden key to Telegram that will unlock the private channels for you. Which means not only can you come to the Thursday night members-only workshop, but we have years of previous workshops archived in a private Telegram channel. As a member, you'll have the key to open that channel, and if you want to watch previous workshops, you can watch to your heart's content. Do you need to? Not really. What you need to do is you need to show up every day and ask lots of questions. The more questions you ask, the sooner you'll learn. At the same time, I'll be teaching you how to read the chart along with what Michael teaches you every day. And when you can fluidly speak market language, you'll be ready to chase that dream, whatever it is. Remember, God didn't create you to be a trader. What he's done is he's given you an opportunity to learn how to trade so you'll have the resources to do what he created you to do. Ministry costs money. God may have put a burden on your heart to build orphanages. Let me tell you firsthand, that costs a lot of money. You want to feed the hungry? Got to have some money. Want to clothe the naked? Got to have some money. Want to house the homeless? It's going to take money. Ministry costs money. A lot of people think that because God has called them into a particular ministry, that all of a sudden $100 bills are going to just fall from the sky. It doesn't work that way. I'm sorry, I'm just being honest with you. Okay? I've told you the truth about trading, and that's the truth about God. He has a call on each and every one of your lives. If you haven't discovered what it is, talk to him. Spend time talking to him and listening to what he speaks to your heart. Because that will put passion in your bones. It'll put fire in your belly. And you and God and the power of the Holy Spirit can literally change the world. Let's go to our good word for the day and wrap this up. Been so kind to stick around so long, so I won't make it long. Yesterday we talked about the joys of heaven, part 1. Here's part 2. Revelation 21:16. The city is laid out as a square. Its length is as great as its breadth. The next time you feel cramped for space, read this verse. The city is laid out as a square. Its length is as great as its breadth. And he measured the city with the reed, 12,000 furlongs. Its length, breadth, and height are equal. Again, that's Revelation 21:16. That's an area of over 2 million square miles, making the New Jerusalem, which is what John's talking about in Revelation, bigger than most countries in the world. In fact, it's almost 24 times larger than the United Kingdom and over half the size of the entire continent of Europe. A city that big would be anything but crowded and uncomfortable. And here is something even more incredible. It's 1,500 miles high. there will be no space limitations. And that confirms what Jesus said about heaven in John 14:2. In my Father's house are many mansions. I go to prepare a place for you. Since the same God who created the earth also designed heaven, and since Paul said heaven will be far better in Philippians 1:23, think of the most beautiful place you have ever visited and multiply that scene by infinity. John was shown the holy city of Jerusalem, whose radiance was like a precious jewel. Revelation 21:10. One night, as he held his father's hand and looked up at the stars, a little boy said to his dad, "If the wrong side of heaven is so beautiful, what must the right side look like?" Jesus died on the cross so that you can go to heaven. But you don't go by chance, you go by choice. So have you placed your trust in Christ to be your Savior? If you have, I'll see you there. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.